All right, we are about 3 minutes away from getting started. Had a little bit of a hiccup there on the front end when I had to start and stop the stream, but I think we are good now, ready to go for the rest of the night. ODX014, Hypers, how's it going? Checking into the Twitch chat. We are just under 3 minutes until we get going. We've got more for you. We got Cash Money. Silpa, how we doing? Masked Mage, we've got new in the YouTube chat. We are a couple minutes away from getting it going. I'm not ready for Monday right now, but we're gonna get ready for Monday. That is the goal for the next couple hours. KB in the YouTube chat. What's going on? BRPM to the moon. We're hoping so. We got a couple months to let that one unfold. But it had a little bit of a spike on Friday, so patiently optimistic with that one. We've got Cliffo in the Twitch chat. What's going on? And we've got Sierra too, who instead of checking in has decided to just shout out Cliffo as her message. I'll give the shout outs, and I like when you guys give each other shout outs too. I like what we got going right now. 50 seconds till we get going. I'm feeling a big night. I'm feeling a big week. Mr. B in the YouTube chat. How we doing? And I would like to point something out really quickly before we get started. We got 30 seconds. We have the live streams channel in the here we go. I'm gonna pull it into the frame right here. We have the live streams channel in the Discord server, and I would like to point out that the 1 week we skipped on October 24th, 7 people were upset about it, but when we come back the next couple weeks and announce that we're doing it, only 2 little green emojis, we get 2 little eyeball emojis. I would just keep the positive energy as much as the negative energy when we're skipping. One small request, but figured we'd clear the air right there before we get it started. What's the timer looking like? Dead on it. We are ready to get started. Let me close out of this. Let me get all these windows closed out. I've got a second monitor. All right, How 451 in the Twitch chat. What's going on? How are we doing? Welcome to our weekly stream, which I think every single week I make the point that this I don't really have a name for our weekly streams. I might need to fix that at some point. But thank you for joining us as we are going to take a look tonight at a little bit of a recap from what we did last week and a look at what we think are the best plays for the upcoming week in the stock market. And last week was an awesome one for us, right? The week before, we were a little bit upset when, we made money. We're never going to be upset about making money, but we underperformed the S&P 500. And that's just something that tends to happen. That's the risk we run when, the S&P 500 has a really big week. And last week, the S&P 500 was up 2.02%, which was basically one of the best weeks of the year for it. So you would think that risk that we underperform increased, but definitely happy to report that we outperformed by 0.11%. We took home a 2.13% return, which was a $3,579 profit for us. So all in all, really, really solid result for us. And a quick recap, we do the recap and then we get into it. Every single week, I say that we're going to try to speed through the recap and we end up spending a little bit too much time on it. But this time, I'm really going to give it a shot. I'll give it a shot. UWMC, we talk about this one a lot. We're holding this till December. It's chilling above $7 a share right now. As long as it finishes above basically 640, we're going to make money. Rocket Lab is awesome. I'm honestly surprised that there's still so much premium left on this thing because it's shot up to about $15 a share, which is double the strike price that we sold for January of 2022. So despite the fact that we still have a couple months till expiry, I'm hoping this premium comes down and gets us some more money. BRPM, we've talked about that one a good bit, but we love this one because it's one of these SPACs where there's a price floor of 10. We got in at 1061. We might average down if it gets back down to about 1015, but we're pretty happy with this trade overall. Let me pull the chart on this one. BRPM. And there you have it. There is some precedent for a little bit of a spike here. You can see the price floor forming around 10, and if it keeps going down, it keeps going down, right? If we lose the trade, we lose the trade. But the idea here is that there's very limited downside to 10 and a ton of upside to what we've already seen for a spike right here up to 1574 back on October 26th. And even more so if we pull up another SPAC like DWAC. Now, there's precedent. Very, very big spikes, and that's by no means us trying to make the claim that this thing's going to run up to 175, but from where BRPM is right now at 1036, there's probably a little bit of a middle ground there where we can make some decent money. The merger isn't until Q1 of 2022, so we're going to hold on to these shares. It might be boring to hold on to these week after week, but the good news is shares never expire. We could sit tight, we could wait and hold week after week until the end of 2021 and see if we can capture another spike. Game plan if we get a spike is going to be to set a trailing stop loss on these shares. I think trailing at about 75 to 80 cents. Usually when you see spikes like this, the subsequent dips are a little bit less than $1. So if we did have some sort of squeeze pattern and there was some growth in the stock price throughout the day, I think a 75 to 80 cent trailing stop is going to be the way to do it. But that's the situation with that right now. It was one of 2 losing trades for us on the week, and the other was a hedge, so I don't even know if that really counts. But all in all, we were very close to a perfect week. We had, what's the count right here? We had 24 different positions. 2 were losers. One of the losers was a hedge. So again, another great example of this high percentage strategy that we're running on a week-to-week basis. I'm moving further down the list. TMC was an awesome one because this is one where we got to really demonstrate the value of the HT wheel process. We got these called away for 3, so that's got to be updated. But all in all, the stock basically dropped about 20% on us. We got in when it was trading at 370. Just within a 2-week period, right? We entered at 1018. It was called away from us on 11.5, so 2-3 week period right there. We were able to pull a 5.5% return on capital on a trade that dropped 20% on us. And again, these are bullish trades. We had a bullish position on a stock that dropped 20%, and we're still making a 5.5% return on capital in 2.5 weeks, which annualizes to almost 200%. And that is why it's so important for us to do our research and identify these great opportunities where we can sell premium, because these are the kind of results that we can get. Even if something moves against us terribly right off the bat, we could still pull some profit by just sticking to the strategy that we've outlined with the HT wheel. So I'm really happy with how TMC turned out. I might sell some 3 puts on that for next week, if the premium ticks back up a little bit. But as of right now, I'm okay to let those shares get called away and move on to the next thing. XCLA had a earnings report on Friday, which wasn't the best. It dipped back down below 2, but our break-even price on this is, I think, around $1.63. And as of Friday at close, if I can delete this really quickly, XELA finished 177. So again, this red line right here is our break-even price. Anywhere above this, we are going to make money. So we really just have 2 more weeks to wait this one out and hope it stays above the red line. And speaking of that red break-even price, Visalink is chilling right around that. I think it's at about $1.70 as of close on Friday. So another one that we're just going to wait out, see how it works. Visalink has some decent flexibility on option strikes for December if we were going to run the HT wheel process on that one as well. So just one that we're going to hold on to for another couple weeks, reevaluate our position come 11/19, and see what we end up at. ASTS was a great one for us. We executed our plan really well. It was trading at about 1080. We sold some 10 strike puts, and it ran up really nicely past $12 a share. So price action wise, that one really went in our favor. So we were able to close this trade out a couple weeks ahead of schedule for 250 of profit just this week. And I think we had some ASTS profit. There it is right there. Just 90 of it last week, but overall $340 gain. And again, the idea is that none of these gains are going to be insane home run gains, but we diversify our portfolio with a lot of smaller positions. We keep collecting some high percentage base hits, and when we collect base hit after base hit, they add up to what I would consider a home run, as we took home almost $4,000 last week. But that's the strategy we got. That's what we're sticking to as we move down this list right here. SPX was our hedge. This basically just makes money as long as the market goes down or just doesn't go up too much, quite frankly, because we normally give ourselves a little bit of cushion right here. This is a typo. That number should be a 4. But, we took profit on this one at the beginning of the week because it expired on 11/3. I believe that was Wednesday. And this next one that we have carries into Monday. So while we have a $570 loss on it right now, that loss is unrealized. And as long as SPX doesn't go up, I think 0.2% tomorrow, we are going to take home max profit on that, which means we're going to have a nice little $1,200 start to our next week as we hope to get off to the right foot to start off. I guess we already started off November, as we hope to keep our momentum going in November, I should say. RTPY, which was a SPAC merger, they changed their ticker to AUR. I think that's one that we called out on our TikTok channel for those of you who are with the kids on TikTok, like we consider ourselves to be. But ticker change there. The idea is that these SPACs, they have merger events which are volatile, but if we pull up the chart for AUR, a lot of the time the option premium overprices the potential volatility. If we zoom back out to the 5-day, you'll know that our 7.5 strike that we sold really was never in danger. Tried to draw the line right there. I messed up. 750, we'll call it right there. So that is our max profit point for the next 2 weeks. To look at this option chain, there's still maybe some opportunity here. The bid-ask spread is pretty wide, and I think that's just a function of the market close on Friday. It's a little bit tighter during the trading day. But if you can get anything above 20 cents on this, I think it's still a decent opportunity, right? That's a 2.39% ROR over a 2-week period. And as we know, anything above a 1% ROR on a weekly basis is a very, very nice return, playing back to this idea of compounding these smaller gains that we're trying to accomplish. So that one went pretty well so far. This should drop off a little more in the coming week. DM, same idea. We sold a 7.5 strike put, 30 cents a premium, a 720 break-even price. We're letting that one play out. CAR, now this is one, I think every single week, I typically can pick out 1 or 2 trades, which were just an awesome opportunity that fell right into our lap. 2 weeks ago, I think that was LIDR, where we made 840 off a pretty quick scalp. And this week, it was CAR, which I believe was the ticker for Avis, where we made $540. And if we held on a little bit longer, we could have gotten that profit up near 1,000. But we are never going to get greedy here. We're going to take our profits because the only thing that is guaranteed in the stock market is what we see in front of us, right? That profit that we see that we could take, and that is exactly what we did. The worst thing in the world is when you have a gain and you're watching the gain and you're watching the gain and all of a sudden something turns against you, and before you can even react, you have a position where you went from a gain to a loss in the blink of an eye. So that is what we tried to avoid with CAR, and we could show you the chart for the option price right here because this is what we think is really our IV reversion strategy that we like to talk about so much, because this is, a lot of the time when you're selling options, you're playing theta, which is the Greek pricing variable for options that has to do with the time decay for that option price. But with Vega, you're actually playing the implied volatility, which is what we were playing right here. And that implied volatility was off the charts after earnings for Avis, where it went from, previously trading at 170, spiked it up to 545.11. Feel very bad for whoever purchased those shares up there. God bless them. But that is the type of buying activity that created this enormous spike. We spike in RSI, but if I pull up the actual implied volatility, this will help us visualize it a little bit better. So what are we looking for with implied volatility reversion? Implied volatility is one of those things that when it goes up, it must come back down. And when you see charts that look like this, the corresponding implied volatility is often very, very similar to what we see right here. We have a spike in implied volatility, which is modeled down below the chart by the blue line. And then as the day progresses and as the week progresses, it starts to level off and drop back down to more normalized levels. So the question is, how do we attack that with our IV reversion strategy? The first thing that we want to look at is to make sure that there's a trading base or previously spiked up from. So since it was previously around 170, we were going to try to sell options for 170 strike, meaning that even if this spike is meritless and it falls all the way back to where it was trading before, we're going to be okay because we would have sold a 170 strike put, and that would mean max profit for us anywhere above 170. Where people get into trouble is when implied volatility is pumping all this premium into the options and they start buying them, and it's pretty much the equivalent of stepping in the door of a casino, and that is just not a great way to invest. That is not how you're going to have long-term success in the market. But what we did we sold the 170 strike put. So at any point during this process, even though it did get a little bit crazy when we got in, when the price was trading around $300 and it went all the way up to 500, and even when it was having a circuit breaker and the stock got halted because it was dropping so fast, we were never really too worried because, again, our max profit point was this red line right here, the 170 strike put. Now let's talk about the most important part of this. What was the price action like on that 170 put? And as you can see right now, as of Friday close, it's trading for 70 cents. So if we kept holding on, and now I hate to play this game, but just to show how effective the decay of the option premium can be, we would have made another $1,000 right there. But we took the profit. That's the smart move. We're going to have more success in the long run by making the smart move as opposed to looking in hindsight and kicking ourselves over what we could have done. But point being is the premium on these decays really quickly when you have spikes in implied volatility like this. So to demonstrate the price action on the put that we saw and took advantage of, we're going to plot this on the chart right next to the stock price itself. We're going to throw this on the 5-day. It's already on the 5-day. We're going to throw this on the 5-day as well. So what you see right here, this lines up right here with the big spike that we have on the chart on the left. We see the big spike in implied volatility, and the purple line that we have right here is called the theoretical option price, right? So in theory, if the stock price goes up, the price of an option should go down. And that's what you see right here. And what's interesting is it's kind of counterintuitive because you get to the point where this purple line is still continuing downwards, meaning that theoretically the stock is going so high that the price of these puts should be going down. But if you look at the red and green candles that you have right here, the price of the puts is actually increasing. And I think the ultimate credit that we were able to get on these was about 6-ish, 6.10. And, I know there were some people in our chat room who were able to get, $8 plus credit, which is insane. Because in the blink of an eye, what you see right here, even though the stock price shoots right back down and pretty much drops $200 between the top of the candle right here at 10:50 a.m. and the bottom at noon, which is essentially a 70-minute chunk of this chart right here, the premium on the options drops pretty much in half, even more than half. It peaked out at about 10 right here, and not a lot of people were getting fills at 10, but more realistically, you definitely could have established a position at 6, 7, or 8, and it only took, by the end of the day for this thing to get below 4, meaning you would have taken home a very big chunk of profit right there. And going into Wednesday, Thursday, Friday, it slowly bled out even more as that implied volatility continued to drop off. So that demonstrates the price action that we're going for here. We try to sell these for as much as we can, buy them back when that implied volatility drops back down. That's exactly what we did. We got in at about 6, got out at about 4. Didn't really want to push our luck here, but I was really happy with that one. I think that was one of our best trades of the week. I know for those of you who are in our Discord server and the HT Premium channels who were along for the ride with that one, so to speak, as we were taking that one on Tuesday, had some really, really nice gains on that one as well. So that was a great trade for us, great trade for the chat. Always fun when we could be in on this one live and all win together, and that's exactly what happened. One maybe little lesson to take away from this is the implied volatility spike on the front end. We got a little bit impatient. If we zoom in right here, we'll see that after it got unhalted, it started to jump up, and we saw that it was at 6 and 5 and 6, and I think we had to average up, but we saw, okay, the low of the day was 250. It spiked up to 5, and I said, okay, this is a great time to get in, and we used pretty much our full position around 6, and I think that was my biggest regret, because if we were a little bit more patient and did a better job at scaling into the trade, right? There's nothing wrong with initially getting in right here with maybe 1 contract if your full contract size is 3, and then if it drops down, you've made money. If it goes further up, you can get even more of a credit as you increase your position. But what we did that I think we definitely could have done better is we got in with our full position size at 6, because I saw that, it was down at about 280 for the low of the day. 6 seemed like a bargain because it's almost twice as much as that. It's over twice as much as that, actually. So I thought that was a good price, but looking back, what I would have done differently is maybe open 1 or 2 here, and then on this big candle up near $9 and $10 of premium on this 170 put, that's when I would have added to my position. But never going to be mad at making money. It's just always one of those things where it's great to look back in hindsight. Even though we did so much well with this one, there's still some stuff we can improve, and that is how we're going to improve on the future, by recognizing what we could have done better. And I think that is, excuse me, that's what we could have done better. And to round out the last of these, we have Zillow, we have Penn, and a couple of these smaller weekly ones. We had an earnings trade right here with DraftKings that went really, really well. We analyzed that one in our earnings strategies channel on the Discord server. Same with Groupon. We actually got out of this one before they even announced earnings because we found ourselves in a position where, hey, we could pretty much take 33% of max profit and not even need to worry about earnings messing us up. But even if we did hold through them, they had good earnings, so we would have hit max profit anyways. DraftKings, we held through earnings, we hit max profit. But Zillow and Penn, let's talk about these two really quickly before we get into some analysis for the upcoming week. And I think we're on target to finish at about 9:30 p.m. tonight, Eastern time, of course, in about 5 minutes to get into our analysis for the upcoming week. So I think we're making decent time here as long as I stop rambling. And yeah, Sierra, definitely, we had some awesome trades this week. It's never too bad of a week when you're taking a look at that weekly profit tracker and not really seeing a lot of red cells on there. So we're going to try to keep that up for next week. But before we get into next week, really quickly, I want to talk about Zillow and I want to talk about Penn because these were two identical setups that we played that both resulted in profit. We pulled about $470 of profit on Zillow if we had $310 of Penn profit. That's $780 of profit. And these were really quick trades. I think these were Wednesday, Thursday, Friday trades. So these were the back end of the week where we were able to, collect some more base hits, add 780 to this profit number and keep making these, just building up that portfolio more and more and more. For example, when we start the week off, our list is normally pretty short. I think we're in a good position. And again, I'll go over this in a couple minutes, but I think we're in a good position to collect some decent premium for the upcoming week. But when you start adding 1, 2, 3, 4, 5, 6, 7 plus trades during the week that are collecting 1, 2, 3, 4, $500, that's when you start to see these strategies all coming together and working for you and, eventually getting this result with a really nice week. But to avoid continuing talking in circles about what we did last week, Zillow, Penn, let's talk about it. So with Zillow, I think this might actually be a we have Zillow. We have Penn. What do we see in common? We see two big earnings-related drop-offs. So with Zillow, it's one that we've definitely had our eye on for a little bit. I mean, we were selling puts on this thing. I think it might be better if we just go to the 20-day for both of these because that might give us a little bit better of an idea. And not to, a little spoiler that I'm going to throw RSI up here because that's going to be what we mainly talk about. Come on. RSI. Oh, I missed it. Okay. Bear with me as I apparently learned how to use a computer mouse tonight for the first time. There we go. We've got RSI up on both charts. So Zillow is one that we've been watching for a while. We were super happy to own this anywhere around 100. So when we saw this initial drop off below 100, we said, okay, this could be a really good buying opportunity. But there was a news related event that dropped this down to 86, and it's when they announced up at the front end of the week that they were going to discontinue their home buying program, which is when basically they were buying all these homes and trying to take advantage of the hot housing market. I mean, they were offering way above asking price and then trying to flip them for more, and it was really a disaster as evidenced by, them basically losing half of the value of their company in 1 week's time. But with that said, I was a little bit uneasy going into earnings because that could be such a big binary event. So we said, hey, we'll see what happens with earnings. We'll see how those shake out. And then we will potentially jump in. And what happened was, our hunch to be a little bit on the safer side of things worked out very well because it had an enormous drop on earnings. And now the question is, how do you avoid catching a falling knife? And I think answer number one is with a put selling strategy, getting in at what you may perceive to be the bottom and then giving yourself an even bigger cushion is a great way to try to catch that falling knife. But beyond that, where can we conceivably think that that Zillow is going to stop? And we've got some questions about Tesla, Roblox, TTT. We will definitely hit those right after this discussion about Zillow and Penn Gaming. But, the idea with Zillow is when this thing's dropping so hard, so fast, how do we know where it's going to stop? And the answer is to look to the left. If we go back to the 1 year chart, we don't really see any support, right? Because the low for 1 year was about 84. And when it broke through 84, we were going to have some problems. And so we had to go to the 3 year chart to try to figure out where this thing would stop. And the point of it having an $83 low over the last year, in the last 3 years, we finally find a point where there's a couple points of resistance points of resistance, and then it breaks through to run up to this, 200 at the peak back in February 2021. But from a TA perspective, when you have points of resistance like this, when it breaks through on the way back down, those are going to be support. So we basically threw a line at the top of these two peaks right here and said, okay, what does this fall at? And the top of these peaks fell roughly around, if we hover over here, this is drawn basically at $65 a share. And this is why I really like to use TA so much from a support and resistance standpoint, because it was pretty damn accurate as far as predicting where Zillow would stop its huge collapse and where it would ultimately bounce from. So that is what we did. We sold 65 strike puts on Zillow. We were able to get 63 cents of premium on those at the time. I think those got a little bit dicey as it continued to drop, because obviously you're never going to time the bottom. So the continued slide on Wednesday, November 3rd, put us in a little bit of a pickle, but we trusted the technical analysis. And looking back at this red line that we just drew with that support that we demonstrated about a year and a half ago on the Zillow chart, I mean, the bounce was almost damn near on the numbers. So that is a great way to try to figure out what strike you want to sell if you are trying to target a setup like this. But when you have big drops like this post earnings, the great part is the opportunity that the option premium provides you. And on the back end of this drop, speaking of scaling into trades, we were able to get 41 cents of premium on weekly 55 strike puts, which quite frankly is just insane to me, right? Because if we want to draw these little break evens again, 55 is all the way down here, right? And we know that's below a level of support. Zillow is already, and if we go to the 180-day chart here, one of my other points is that it's so oversold from an RSI perspective. And it's one of those things where the numbers take over from an analysis perspective. This could be the worst stock in the world and be on its way to 40, but it's never going to be a straight line to the bottom. Even as we've seen over the last 180 days, even when there are these big drops and we start to get into oversold territory and it turns blue, let's look at where this lines up vertically. It bounces right back. When it gets into the blue, it bounces right back. Gets into the blue, bounces back momentarily, and I'm not going to go through every single one of these, but you get the point. When it gets into the blue, it's going to bounce back. And when we took a look at the 180-day RSI after earnings, this is as low as the RSI on this thing has been in a long time. It's about as low of an RSI as I've seen on a 180-day chart just about ever. So we were really confident that at some point we would get a little bit of a rebound. If we go back to the 5-day chart, we are going to see that we did get some relief from there. It's starting to level off. On the 180-day chart, still definitely a little bit of a room for it to either level off or rebound up to 70. And going off of that analysis, that is the reason why we sold some Zillow 55 strike puts for the upcoming week. But I like the way that it sets up right now, and that is why we were confident in doing that. So let's go back to the 20-day chart here, and let's talk about Penn Gaming, which we have plotted identically out to the right. And this is one same exact deal, right? They didn't have any bad news on the front end that dropped it before earnings like we had with Zillow. But their earnings weren't the greatest. If we go back to the 180-day chart, I guess our question was going to be, hey, we've recognized that this is dropping. Gambling is an industry that I'm perfectly happy to invest in because I think it's one of those things that's only going to become more legal and more widespread, and that is something I'm perfectly happy to be investing in. So the question is, we want to set up a bullish position. Where do we set it up? We saw it had a huge drop, and I think we got in at about the 60 level, and as you could see, similarly to Zillow, you're probably not going to time the bottom. We definitely didn't time the bottom. It got down to 56. But what we did was we took a look to the left. We'll go to the 1-year chart. We can't really see too much right around here. But let's go to the 3-year chart. And this is when we start to see a little bit more, right? We see this little bit of a support level right around here because back in October of 2020, that's how far back we had to look. That is the level it bounced off of right here at, again, this line's at about 55. 55 is the level of support that we identified. And again, if you take a look at this candle wick, that's pretty close to where it ended up getting to. 56 is where it bounced off of. So while sometimes I think TA is not the greatest thing in the world, I think support and resistance technical analysis for use when picking strikes on puts that you want to sell is fantastic. So what we ended up doing, using that technical analysis that I just outlined, we sold 55 strike puts. We got 62 cents of premium for it, and that was a strike. Again, our break-even price was right here. It never even really got, I guess, it did get threatened, but it never got crossed. In fact, our max profit point of 55 never got crossed either. So while it did get a little bit dicey and, you never really know where things are going to stop, we were pretty confident both on Zillow and on Penn with that technical analysis, looking to the left on the chart, identifying potential points of support based off past price action, that the strikes that we chose with Zillow at 65 and Penn at 55 were going to be pretty solid, and that played out pretty much to perfection, and that helped us take home another $780. But that's just an example of the type of analysis that were thrown into these trades. And again, that was one of like 24 trades those were two of 24 trades that we had during the week. So a little bit of analysis on play by play. We like to identify opportunity after opportunity after opportunity, collect all these base hits, and then that parlays itself, no pun intended on the Penn gaming analysis, but that parlays itself into a really, really nice week overall. So there you have it. $3,579 was the final total. This is our weekly recap. Going to the year-to-date summary, I think most importantly is we've hit a 100% plus return overall on the year, and that was a target when we really started to get hot this summer and found ourselves in the 40, 50, 60% return range. That was a goal that we had set out there for ourselves. And we, as of right now, obviously we could, lose every single week going forward here. That probably is not what's going to happen because we've had a really solid approach ever since we slightly switched things up in July. But, that could happen. Market could crash tomorrow. We can go back below 100. But we could also, for the short time frame that we're in right now, celebrate the fact that we are, as of right now, above a 100% return on the year. So we're super excited about that. Pulling away from the S&P 500 as we pull into the back end of the year. Have not had a single losing month on the year so far. We've only underperformed in 2 months. One of those was October, which was the best month for the S&P 500 in a long, long time. And then February, where we ran into a little bit of trouble, but still made money overall. Sierra, you are killing it too, though. That's the great part. If we're doing well, it means you guys are doing well if you're following along with us. And speaking of following along with us, before we get into our analysis for the upcoming week in the market, great time for a little bit of self-promo to plug our website, hourglass-trader.com. Let's take a little bit of a visit really quickly here. What you will see is our homepage right here, which, terribly designed by myself because I have zero experience in web design. But what we got is what we got. We've got our blog, but most importantly, this has the link to join HT Premium. $225 annual or $25 a month. You can get a free week by signing up for HT Premium on our website off the bat. Or if you want a free month, you can go to get Premium for free, where it has a link to our Webull referral link, where if you sign up for that, deposit $100, we are going to give you a free month of HT Premium. Pulling our Discord server onto the stream really quickly. All of these channels right here and below in our Discord server are going to be free. They're always going to be free. Our goal is to make the education around option selling and the strategies that we run free forever. However, if you do want to add a little bit to your trading experience, that is where HT Premium is going to come in. We've got our premium chat room, which is far more active than the main one, unfortunately, but a lot of great discussion that goes on in there. Every single trade, entry, and exit that we make is posted and alerted in here as we make it, so you quite literally can do everything we do. We have new channels where we've got some VWAP and spread analysis, where some of our more talented and intelligent members have so generously decided to help turn some of their focus there for traders who, while option selling is great, sometimes it can get a little bit boring. So if you want to spice up or diversify some of your trading, we got the options there. We've got trade plans explaining why we're in the things that we're in for some of the larger trades. Link to a watch list so you could look at what we're looking at, link to our option scanners. But, the value really is helping follow along. We are in the premium chat room pretty much at all hours of the day, fleshing out these opportunities, talking up front about some of the analysis that we laid out here in our weekly recap, and that is the value in that. So if you want to sign up for that, hourglass-trader.com, use that button on the homepage, and that is going to get you to the sign up screen. And with that, I am going to stop the self promo, and we are going to get into the important part, which is what are we going to do to keep it rolling for the upcoming week, so to speak, right? It's great and all that we did great last week. I hope that some of you guys have learned from what we did last week, but most importantly, how are we going to make money this week? So let's talk about it. And really quickly, let's take a peek back at the chat here, right? We've got some questions about Tesla, Roblox, TTD. Let's take a look at those. And Trader Cliffo, great guy. He's in our $250,000 profit club, saying the best value out there. So, if someone like that's saying that, can't disagree with that. But taking a look at Tesla, are we going to short Tesla? The answer is honestly no. I do not want to short Tesla. Why is that? Because there's this pretty big cult following on Tesla. And as much as I hate Tesla, and I think Tesla is going to drop in the future, and I think I have like a $400 price target on it in our watch list. And another thing in the watch list, I include price targets. Keep an eye out for and when to keep an eye out for it. But going to the 3-year chart here, I have gotten burned before, not shorting naked, but using call credit spreads to try and play Tesla back down. We see some very, very inflated valuations in the stock market right now, and I feel like I've said this before, but I think Tesla is basically the poster child for these just insane valuations that we've been seeing in the market. Really just defies logic, and I've gotten to the point where I've accepted that I don't entirely understand it. So I'm not going to get in the way of it. I'm not going to, lay down on the train tracks and let myself get run over by the Tesla train again. I think if we go to our 2020 tracker, I've hated this thing for a while. Here you go. You have some beautiful Tesla call spreads that I opened off the bat that lost $2,500. Now I kind of kept averaging in and eventually made money, which is the beauty of call spreads. We eventually made $788. But since July of last year, I have hated the valuation on this thing. And if we look at the chart, July of last year, is right around here. I hated the valuation here. Since then, it has gone up 4x, which is just unbelievable to think about. And to the point that Jake02, cute, great username, in the YouTube chat is making, Tesla has this cult-like following where, if you try to base some sort of investment thesis in fundamentals, it's just going to kind of get shit on by people who are blindly buying Tesla because it's Tesla. So that is something where I've decided, look, I have gotten burned, or maybe not burned, but it's given me some heart attacks before. No need to needlessly put myself in the way of this. You could get to the point where you saw this big red candle and you thought, okay, this is ridiculous, because quite frankly, I did think it was ridiculous when it broke $1,000, and then it still went 20% up beyond that. So, I just do not get this one. Anyone who does anyone who says they get this one, I think they're lying to you. But one of the many wonders of the current state of the stock market is the current price of Tesla. And if we want to talk about RSI on the 180 day, it was getting up there. It was in the 90s, which is something that's kind of crazy because we don't see a lot of that. Similarly to how we saw, Zillow down so low, the other side of that is seeing RSI so high like we saw right here before it, inevitably dropped back down for a second and then spiked back up. And moral of the story, I'm not getting in the way of Tesla. So that is my opinion on there. Do I think it's going to drop? Yes, I hate the stock, and I think eventually the numbers and fundamentals are going to win out. But as for when that's going to happen, that's anyone's guess, and I am not going to lose money trying to guess. So that brings us to Roblox, which we got a question about from KB in the chat. Hey, appreciate you joining us again for another week. We got a frequent viewer, always happy to take a look. Roblox, this is actually one that I think has been solid for option selling lately. You notice I've already got some red lines on here because I've done some analysis. We've opened a trade or two on Roblox. Let me remove all these so we can take a little bit. Actually, this one gets to stay. This one plots where I think support is, and this is secondary support, so they both get to stay. Only the top one got to leave. But with where it's trading, 78.1, it bottomed out mid-October, which, I say mid-October as if it's forever ago. That was like 3 weeks ago. But it bottomed out at around $70 a share before bouncing back up. This looks like it could be another mid-level of support, so we could plot that right there. A little right-click, extend it to the left, and now we've got 3 levels of support, which so beautifully are in $5 intervals at 75, 70, and 65 for us right here. So what does that mean for option selling? Let's take a look at the option chart. So at those levels, right, 75, we have a 4.38% return on risk, which is quite frankly massive. Are they reporting earnings? That is just some huge premium right here. RBLX. Here you go. Look at that. Earnings are 11/8/21 after hours. So, just another quick general lesson right there is anytime you see some premium that looks like it is insane, check to see if they've got earnings, because more often than not, they do. And they have them 11/8, which is going to be Monday after market. And so while these are some great, great, great premiums, and honestly, like, what did we plot as the bottom level? 65 as like the third level of support. So it would have to go through 1, 2, 3 levels of support to get below that. What are the 65 strike puts looking like? 0.91% return on risk. That's right around that 1% number, which we consider to be a good return from an ROR perspective on a weekly basis. So honestly, I don't hate the 65 strike puts, but what I'm not the biggest fan of, and again, we could use the MMM, the market maker move here to get an idea of a general range that we could expect from this. It's 8.47, which would put this basically at like 69.50-ish as the low end of the range, which falls right around here, right below the second level of support. But I like the idea of the 65 strike put, 0.91% ROR. Another great one about Roblox is if you were going to sell one of these, normally it would take about $6,500 of collateral. Margin requirements are pretty low. It only takes 650, which is, a 10% buying power requirement. So that turns this basically a 10x return on a capital basis. So 0.91% ROR, but since it's only a 10% margin requirement, it's a 9.1% ROC, return on capital, return on collateral. So from a capital efficiency standpoint, the margin that this one gives you is actually super, super nice. I like the idea of maybe selling a couple of these, but what scares me a little bit is playing earnings at the beginning of the week, because I typically like Wednesday afternoon and beyond. Because at the end of the week, if you're going to sell weekly options, one, theta decay is basically exponential as you are leading up to expiry. And two, Wednesday, Thursday, or I guess Wednesday night means you only have Thursday trading day and Friday trading day. So there isn't a lot of time in the market for it to do something beyond earnings. Because we could be dead on about earnings. It drops down to 70. We're like, okay, we won. We sold 65 strike puts. And then the market tanks over the next 4 days. And all of a sudden, you're down below the strike price, even though as of the earnings event, you were looking pretty good. So that extra, time frame that allows some more price risk is something I stay away from. So I don't love the Monday earnings, but the 65 strike puts don't look terrible here. So that's my thought on Roblox TTT, the trading desk. Let's take a peek. The trade desk, excuse me. I did not mean to put the ing there. No disrespect to anyone who is involved with the trade desk. But this one I think used to be a lot higher. Did it undergo a stock split? It did undergo a stock split. There you go, 10-1. But with that said, when we zoom out and look at charts like this, it always scares me a little bit to see something that looks like this. 3 years ago is obviously a pretty long time frame. But let's zoom in to the 1 year. And that's honestly not as bad. A little more stable than I would have assumed, but you have a pretty damn wide range here between 97 and 46. And with that said, you've got this level of support right around, 63, 65. And if it breaks through that, breaks through 60 here, it could fill this gap that we see right here relatively quickly. I'm not the biggest fan of this from an entry perspective, but again, let's take a look at the options. And we are seeing some very large option premiums, which means I think our friend KB, he said both have earnings tomorrow on 11/8. So he gave us 2 earnings trades. But, let's take what we know about the market maker move here in the range, right? A 9.72 range. And I actually built this into, not that I, very professionally built this. It looks kind of crappy. But if we type in TTD, the current price is 68.55. The market maker move is 972, that yellow number that we see up here. So we're going to type 972 up in there. And again, that's kind of crazy. There's a 14% expected move, meaning the range is going to be from 58.83 to 78.27. So let's plot that on there and see what that actually looks like. 58.83 on the low end. And I'm going to get close, but not exactly. That's close-ish. 58.83, and what did we say was the high end? 78.27. So let's draw that on there as well. 78.27, close enough. Come on, come on, come on, extend to the left. So there is the expected range. And when we draw the range on here, the first thing that we're trying to look at when we run this type of analysis, as I quickly check on futures, which are down 0.25%, we want to see if any of these outside ranges for the expected move line up with the areas of support or resistance. And what you see right here with this bottom level of support, the bottom level of the expected move is it lines up with support at around this 59 to 60 level. So I think selling options right around here is probably a decent idea for the upcoming earnings. Again, because this would be a 14% drop that you're protected against in the event that it does go down. And another point to make is that there were two really big red candles before earnings. So on an RSI, I guess from an RSI perspective, it's already getting pretty oversold. We're on the 1-year chart, but if we go to the 180 day, I bet there you go. It's now down in the blue from an RSI perspective. If we walk backwards, we look left. The last time it was blue, spike back up, spike back up, spike back up momentarily. You have another spike back up off the bottom blue right here. And again, this is a pretty big earnings drop right here. So there is some precedent for there being some decent earnings movement on this thing. And another good way to look at this is go to the analyze, go to the earnings, and then type in TTD. And there you see that. Where's the big earnings drop we're looking at? There it is right there. The numbers are off because they had a 10-to-1 reverse stock split. Not reverse, excuse me. They had a 10-to-1 stock split. So that's why these numbers are in the hundreds. But yeah, I mean, definitely some precedent for some big downward moves. But I kind of love the fact that there already has been a big downward move before earnings have even occurred. I like the idea of selling something for around the 60 strike on the put side of things. And if we look at that, that's a 3% ROR. And let's take a look at the margin requirements, right? If we were going to sell a 60 strike put, we know it would normally be about $6,000, and now it's only 600. This is kind of wild. Same margin privileges as we had with the first one we looked at, Roblox. So even though this is a 3% ROR, you'd be swinging a 30% return on capital invested, which is kind of crazy, right? You've got a 170 return off 600 of risk, which is fantastic. So I think that might actually be one I take a look at where we just, even though I don't know a ton about the stock, we're just going to look at the numbers as they exist and play the numbers. Because, in the end, we're playing a numbers game. We're trying to put ourselves in positions where we can expect to win majority of the time and try our best to protect our downside. And while it does worry me that there's a little bit of downside here to the 50 level, you could still, even at that 50 level, you could still get almost 1%. You get 0.81% ROR. I mean, 55 might be a good trade-off right there. If you really want to get aggressive and go higher than that, I think a spread's a good way to do this. If we do a vertical put spread at 55.60, that's a 1-to-4 return. 25% roughly return on risk on that spread, which is decent for how far out of the money it is. And one thing that I kind of like have toyed with the idea of doing is selling a spread with the intention of taking assignment, right? So if it does drop off the bat, what we would do is get rid of these 55 strike puts at profit right off the bat, and then let those 60 strike puts ride out and then see if we can recoup some capital on those. But, I love the idea. Anything bullish around 60. I don't know too much about doing anything on the bearish side because, we have some nice, congruence between the support at 59 and where we have the bottom end of the expected move at. You don't really see too much of that on the top end of things, right? Resistance looks to be around, if we, 81-ish. We already have precedent for this thing going to 90. I think there's nothing stopping it from breaking through that upper level of expected move at about 78. So, if you were going to do anything, if I were going to do anything, I should say, that 60-ish level bullish trade is what I would be looking at. And again, these are both have earnings. They both have earnings on tomorrow, November the 8th, after market. And it looks like Cash Money has picked up a little trick. He didn't know he could show spreads like that. Go into spread vertical. There's all sorts of good stuff you could do right here. If you want to sell covered calls, you could go right here and get your actual price that you want your basis to be. You could do iron condors right here too, and you could just mess with the legs right there. But that is a quick way to do that because I know a lot of people do the either try to open legs separately, which is a little bit risky and admittedly is what I was doing off the bat before I realized that you could just go to a vertical spread and do all that. But with that said, we talked about Tesla, talked about Roblox, talked about TTD. Let's talk about what we've got for the upcoming week and what we think is a good look as we're coming up on the 10 o'clock Eastern time hour. It looks like Cash has been doing it manually this whole time. Well, I cannot imagine how efficient you are about to be in the market with this with the new 15 seconds. This is going to be saving you going forward. Huge mistake. Went for a drink of water and I really only had one sip left. Did not refill it before the stream. Amateur move by myself. But with what we have for the upcoming week, I think one of the best ways to evaluate how we are positioned for the upcoming week is to kind of play with where we could expect the premium to go. UWMC is kind of in no man's land at about 705, where did it finish up at? 706 is where it finished up at, the 704, 710 bid after hours. We can call that 705-ish. So that's kind of in no man's land right there. I don't expect too much of the premium to move there. I definitely expect to at least get a little bit on Rocket Lab. BRPM, again, I could go either way on that one. It could run up to 14 this week and spike and we make a ton of money. But as far as a conservative estimate for what we could expect from this upcoming week from a premium collection perspective, that is one I'm going to leave alone as well. SPIR 5-strike put, it's trading at about 570. So if it stays where it is, we have 2 weeks till expiry. We'd expect that maybe half that premium melts off. XCLA, again, kind of in no man's land. Visalink, same deal. We're going to leave those alone. If SPX hits max profit, which it is on track to do, which is why I keep looking at the futures, because as long as it doesn't go up 0.2%, we're going to hit that profit right there. AUR, I think it closed almost at $10 a share. 2 weeks till expiry, we can maybe expect to get a little more than half of that. We'll call that 10 cents. DM, same deal. I think we could maybe expect to get half that this week. CRISPR, we'll conservatively, let's say we get half that as well. And then Zillow, if that stays above 55, those are max profit. But this is off the bat with this short list of trades that we have. If nothing goes too terribly, and again, this isn't assuming things shoot up and go in our favor. It's just assuming things kind of stay where they are. We're not getting aggressive and saying, oh, if this goes up 20%, we're going to make all this money. But at the same time, we're not saying, hey, if this completely turns against me and tanks, this is what's going to happen to me. But I think this is a relatively conservative outlook on what we could expect just from these base level positions that we have heading into the upcoming week. And this is a really good number, right? As long as it's above 1%, I think you're in a solid starting spot. And again, that's keeping in mind the fact that even though we start with this shorter list, as the week progresses, Monday morning, Tuesday morning, Wednesday morning, we're going to have all these different opportunities happening. Everything is going to be moving quickly. We're going to be discussing things in our Discord. We're going to be alerting different trades. And by the end of the week, this short list, which for those of you who watch our stream every Sunday night, it pretty much starts as this short of a list every single week and then turns into something like this or like this or like this. But point being, there's going to be more trades. So we have this $2,800 profit base that we're going to try to build off of. So how are we going to build off of that? We're coming up on 10 p.m. on 1 hour on the stream. Unfortunately, got a little bit of actual work I have to knock out tonight, but we'll take a quick look at the scan, see if we can see anything interesting coming up. I'll try my best to do some earnings analysis in the actual Discord itself as the week progresses. Like I said earlier, normally I try to target Wednesday afternoon and beyond earnings, so I think that kind of analysis will come in a couple days. And I think we had some in the chat in that earnings channel this past week on DraftKings and Groupon, and those turned out pretty well. But let's take a look at the scan right here. We're going to want to pull in our scanner, our preset scanner, high ROR puts without earnings. And again, you can have that very setup yourself if you go to hourglass-trader.com and sign up for HT Premium. You will get access to every single scanner that we have loaded in here and that we run ourselves to find opportunities. But with that said, we've got this loaded in. I think, yeah, there it is. Okay, we are going to scan and see what comes up. Okay, and we've got these sorted by ROR. One thing that's helpful sometimes is to set the minimum bid at like 1 cent so some of these erroneous results go away. But there's some big premiums. Let's kind of go down the list really quickly and evaluate what we're seeing. GWH, 13.39%. This is a stock that's trading around like $18 a share. Recent SPAC, so we know that net asset value on the SPAC would be about $10 a share. So pretty big disconnect between where it's at and where the merger price was. Just to help visualize that, we could pull up GWH. Boom, there you have it. That net asset value right around $10 a share. I mean, it ran up to 20. A lot of people are saying, oh, I think it's going to keep running. But from a fundamental perspective, we like to keep a lot of our investment theses grounded in numbers and logic. So knowing that they had this merger in October that valued them at around this price, I don't know if there's anything that's happened since the beginning of October that justifies an 80% increase in the enterprise value right here, the market cap of the company. So that is why we try to stay away from SPACs like this, because you'll see setups like this all the time, and people get burned so many times because, as you can see when you run scans, things like this are going to come to the top because this type of price action creates premium. When it creates premium, people are going to find it. But important not to chase the carrot, not chase the very first thing that we see at the top of our scan, and move on to the next one, right? BBBY. Same idea, right? BBBY. That was another one like Zillow and not like Zillow and Penn, excuse me. It was one that was like CAR, where we have this big spike, which created some implied volatility where we were able to sell some 17.5 strike puts. But to that point, moving in on the 10-day chart for a better look at this, it was trading around $14 a share before. Yeah, the earnings were good, but I don't know if they were good enough to justify a 100% pretty much overnight increase in the stock price. That's one we're going to try to stay away from as well. BTBT, crypto miner, and until crypto cools off, I'm staying away from that sector. DWAC, this is GWH on steroids, right? This is not SWAC, DWAC. We zoom this puppy out of the 1 year, $10 price floor again, peaked at 175, back to 56. Still a ton of room between 56 and $10 a share. Leave that one alone. Buyer beware on that. Let's see, anything else that sticks out? FFIE, interesting premium, but they have an upcoming pipe unlock. We don't know when that is going to be, but we are hoping it is soon because I think we have a bearish position on that one. ENDP, they had some earnings recently that were pretty well, but there isn't premium anywhere near where the base used to be. Let's see. And we've got Masked Mage, a YouTube saying, he's got limit orders set on BRPM, so it should be making profits if it spikes up. Yeah, exactly. And we're never going to call the bottom. We're never going to get out at the top, right? That's just one fundamental fact of trading that I think is important to accept sooner rather than later. We were not going to buy BRPM at the bottom, so I'm not surprised that it's continued to drop since we entered at about, I think, 1060, 1080. I forgot what we entered at. But beside the point, right? We want to scale in. And for me, if it goes back down to 1015, I'm going to scale further in because at 1015, the downside is very, very, very limited. But continuing to move further down this list, a lot of, and I guess with the caveat that I pretty much pre-screened this list before we went on the stream, so I'm not just kind of BSing as I go down here, but a lot of these are not the types of setups that we like to look for, right? Now, Peloton is actually interesting because they had a similar earnings drop to Zillow and Penn, and people might say, hey, why don't you get on this one? It's a very, very similar setup. If we take a look at the 3-year chart, I don't really have a good idea of where this is going to be stopping because it is really more of a gradual run-up from that low of 17 to the high back in October of 2020 of about 140. So not really a great idea of where that one's going to stop. And beyond that, I'm really not super bullish on Peloton in the near future because exercise is one of those things that obviously people are going to be exercising forever, but the way in which people exercise, things like Peloton, I feel like are kind of fad-ish in nature. And COVID happening was pretty much the best case scenario for this company. And we're only going to get more and more open as a society now that we have the vaccine. Things are opening back up. I just don't think conditions are going to get any better than they were back here for Peloton. And when they reported the numbers, it reflected that as well as they had that big drop off. So just one that in general, the golden rule is not to sell puts on something that you don't want to own. I really don't want to own Peloton. And I really wish we had something a little bit more exciting here on the scan that we could wake up Monday morning and say, hey, we're going to get in on this. It's going to be great. But honestly, nothing incredible. We might lean a little bit more heavily on earnings trades this week, right? When I can't find a lot on here. There's premium elsewhere in the market. And I think if we... I definitely had, where did I put the Discord server tab? It's gone. I closed it. Okay, if we go to the earnings channel that we have in here, I posted a infographic that has the upcoming earnings in the market this week. And again, to reiterate the point that when you're going through the scanner, not everyone is going to be a great idea. And in the point of what we're looking at right now, most of them are pretty bad ideas for how the setups look and what we like to typically target. But with that said, what's interesting right here, hold on, SOS, 6%. This could be interesting. I know it's a Bitcoin miner, but that's a pretty low price. Price floor looking like it could be around $2. 180-day chart, you got a low of 2. If you go back to 2, you could see, do they have earnings or anything coming up? I'm not really sure. But at that 2 level, if we go to a single, a 4.4% ROR is pretty damn good for a week. Now you're going to be paying a lot of a lot of commission on this because the contracts are pretty cheap. They're going to be fully cash secured, but nothing wrong with selling fully cash secured when the result is you getting a 4.4% ROR. So that might be one we take a look at, but I really feel like they might have something coming up. Let me type their ticker into here really quickly. SOS, nothing on the horizon. I say we take a shot, right? 23-cent plus or minus expected move on this thing, meaning that the bottom end of the range is going to be roughly, 188, and this would have a break-even price of 193. So, I mean, nothing too bad there, and that's something with these 50-cent intervals and weekly expiries could be a very good candidate for the HT option wheel. So, you know what? As bad as some of these were, and I know I said I'm avoiding BTBT because it's a Bitcoin miner, and this is a Bitcoin miner as well. Not the worst one. It is a little bit of a riskier stock. I think it's a China stock. And, having a combo China Bitcoin stock is kind of it is not the safest idea in the world, but it's something that's kind of interesting if you want to get some action from something on this scanner. That is probably one of the better setups right here. We've got Sierra saying it charges an ADR fee if you hold it. That is a very interesting point to be made. So when you are making the decision of if you want to take assignment or if you want to roll your options to next week, this would be a great example of if you want to forego the ADR fee, rolling your options to the next week as opposed to taking assignment in the event that the stock dropped would be a pretty solid idea. So again, just taking one quick peek back at the scan, just nothing that great. But again, we always start the week with this short of a list. If this tab comes back, there we go. Really, there's only so much you could plan for on a Sunday night before the market opens. And, a lot of the analysis we do is going to be happening live during the week in our premium Discord channels where we're going to alert our trades. So if you want to get in on that, get it hourglass-trader.com, sign up for HT Premium. But to the point I was making when I pulled this tab up in the first place, here are the earnings we have in the upcoming week. When you pull a scan up and you don't really see anything you're in love with, it's okay if there isn't great premium. I mean, obviously there's great premium, but if none of the stocks are great trade ideas, you could lean a little bit more heavily on other areas in the market where there might be premium, one being earnings. And we've got some decent sized names coming up here, right? Wish is one that we've gone to and from several different times. Beyond Meat, SoFi, you have, what's going on here? Neo, Coinbase, Palantir. Palantir is another one that could be pretty decent coming up. It's a front end of the week one. Let's see what that option premium on Palantir is looking like, because that's one that we have played a decent bit. And you could go pretty far to the money here, right? $2.23 expected move. Let's throw this into our little makeshift expected move tracker. If I can tab back up to the top here. Palantir, and we said it was what? 223 expected move, meaning an 8.58% implied move. 23.77 is the low end of the range right there, and I've got several lines on here, right? 23.77 is low end of the range. I tell you what, that lines up pretty well. This doesn't look like a support level, but it looks like something that may have previously been a break-even price for us. Let's remove this. Remove drawing. 23.77 is going to be the low end of the range. High end of the range here is going to be 28.23. Let's go back and draw that in there. 28.23-ish, close enough. And extend these to the left. If it lines up with any support, any, don't die on me now. Here we go. Any resistance. And, top end, there are 2 peaks above it, so I'm not too convinced by the top end of the range, so I wouldn't go for a bearish trade right here. And you don't quite get down to support at what looks like, I think 23 is a much better level of support. So as far as an earnings trade is concerned, I'm not the biggest fan of this. And from these other red lines that we have, much stronger levels of support around 21, 20 bucks a share. So, if something terrible happens like a Zillow or a Penn Gaming type earnings, that would be a great option for this if it breaks down below here. And then you know that, hey, we've got this support of 21 sitting in our back pocket, so we could potentially sell puts at that level if the price does drop enough to give us the opportunity to do that. But, again, I say so often, I don't know if I've said it tonight, so I think it might bear stating, is the fact that, I'm much better off missing out on a good play than getting stuck in a bad trade. So many times we do analysis like this, and it almost feels like we have a gun to our head forcing us to make some sort of trade because we've done all this research and done all this analysis, and we surely should have some sort of trade figured out. But, if you're not in love with the trade, you don't need to make it. And that's a mistake I've made in the past. It's something I definitely have been trying to improve on, because a lot of my losing trades have been just more impulsive, dumber trades. And I think I've done a good job of eliminating some of that from my trading. But again, there's so many different stocks out there that you can sell options on and make different trades on, that if you can't find, that if you're looking at this one like Palantir, you're not in love with it, you don't need to make that trade. We're not in love with this, so we're not going to make that trade. But I think, SOS, interesting one off the bat. I think another week where the game plan is going to be just hang back, wait. Cash is a position to have some decent cash sitting on the sideline. Market's already a little bit red as of right now. And again, a lot can change in the next 12 hours between now and when the market opens. So, we don't know if that's going to stay the case, but if it does stay red when it opens, there could be some better entry opportunities. We'll keep an eye on our watch list. We're going to keep an eye on our scanners. We are going to have some good discussion, alert everything in our Discord channels. But for tonight, that is what we've got for the stream. Had a decent recap. Really good week last week. We're going to try to keep it up for this upcoming week. We broke 3 figures from a percent return perspective, making 101.29%. So far on the year. And again, all publicly tracked and stated in both here in our Discord server. So all these things could be cross-referenced. They're all time-stamped. These are legitimate returns. People have been following us. We're not just sneaking some things in here to advertise a big return, but this is our performance on the year. We are coming into the back end of it, but we are going to finish it strong by sticking to what got us here. And while it may not be the sexiest thing in the world and not have some huge laundry list of trades that we're going to be making on a Sunday night, keeping an eye on the market as the week progresses, and I'm very confident. We haven't had a week where nothing's happened yet. I'm certain we'll have something fall into our lap. So for those of you who are still on and have made it to the end of the stream, thank you so much for tuning in. Again, I think it's good luck if I sign off using the corny little slogan we've got, because I think every time we've done it, we've made money that week. So for those of you who are still watching, thank you so much. This has been the Hourglass Trader, where as time passes, we make money, and hopefully we see you guys again same time next week, Sunday night, 9 p.m., with more money in your account than you have right now. Thanks, guys.